Good morning. This is quick update on our trade. You see how trade can be, and how it can go, how it can get extended. But one thing is that you must know that structure has to be obeyed. The trade went beyond 127 extension of this internal structure. This is US dollar index 1 hour time frame. And we had called that this should be coming to the downside, in as much as we've had like a 1, 2, and a 3, and a 4, and a 5 of this wave to the downside. It was sharp movement, and this was rather corrective. But again, this is where knowledge is important. They try to extend the structure to confuse you, and the structure actually got to the upper limit. For some, on Euro USD, I think it turned at exactly 85 to the downside of the old move, exactly 85 to the downside. And the only thing that will confirm that we are going down is this movement. If it has gone down correctively, then you should be wary that maybe they will change the structure, now setting the resistance to break as this one, which means that they want to correct the whole of this to the upside. And if they had done that, then it will change our configuration entirely. I don't know if you understand what I'm trying to say. Now, if we see that, let me go to the of the daily time frame for you to see what I'm trying to discuss here. Now, our point is that this is A, and this is the end of a B, or a 1 and a 2, but rather conservatively, we should take this as A and a B, and that we at least going to do an equal leg to the downside around somewhere here to have like 100%, and which is still a good trade for anybody. So that's the point. Now, we are saying that if these are changed up here, it may mean that they want to change this to probably an A, and this going to the upside a B, and that the B leg probably is not just complete, and which means that this will now become an A, B, C, and the probably trade will go up and going to test closer to 85 or 76, 78 up here. But that is not what we see, because we had counted this as the first part of a wave, A, B, C of B, and a C. And this is an extended flat here that, prove that 90% we are not going to break this top again, but that we are coming to the downside. Now, with the move here, and with what is happening here, that is what I want you to see now. And how they can change that. Let me try and zoom, if I can go on a 4-hour, so that you understand what I'm trying to say. Now, on the bigger picture now. So this is the bigger picture from here. This is C here. And we are taught that this is a wave 1, and we're going to do a wave 2. Or a wave A and a wave B. And with this from here, without breaking this top, we are turned to the downside. So the price will now change everything if the way and manner it's going up, for us to believe that now this with A and B, and this B is not enough, so which means that this one will now become A from here. This one becomes A. This might just be the first wave that we say is that we are finished here, and this is A. So it may mean that it's part of correction, and this one now becomes, if this one becomes an A, this one becomes another A, a smaller A, and a B, and a C, before we can go to the downside. So that is what it could be, because if they want to break here, but now we are done, we are going further down. So our count still remains. That's what I'm trying to say. This count still remains. The count still remains because with these as a 2 to the upside or as a B here, we are taught that the price will print this as an A and a B, and this will be a 3-1 of that move. Or if you say this is 2, this will become a 3-1 and this will become a 3-2. And we're going to now be seeing a big wave of a 3-3, which is going to break. So that is what we were thinking. And the way that we're going to the upside, we are taught that this may just be an A, B, C. So if this one becomes an A, B, C, because it becomes an A, B, C, it's not going to be a motive wave again if this one had broken more to the upside. So this one becomes an A, B, C of an A. This one going to the upside becomes a B. And they will correct to push more upside before we have a C, a shorter C, and the price is going to break up. But that is not what the structure is telling us on the higher time frame. So the higher time frame, structure is correct as we've been, applying ourselves, even though they are actually, close up here. You can see the primary two here. This trade actually broke slightly beyond by a few pips beyond the primary two, but without erasing these. So this stood as a resistance. And with the move here, this an A, B to C, just a bit broke 161.8 extension that we expect of an ABC correction. So, but it didn't hold above it. So all these things, price is not all that perfect, but we have to look at what exactly the structure, where is changing. So now I want to show you something here. When I got to know that, oh, this price is coming down and it's burnt down. Let me go inside of a 1 hour time frame for us to see now. We are seeing this as an A, a B, and the C part, ran 5 waves, which is a 1 and a 2 here, and the 3 got here. The 3 became extended, and this is the 4th wave, and this is the 5th wave. And I was counting the internal structure of this wave for me to know once I break the 4th wave of this, I can take a risk. And I will show you how to do that. You are going to focus on, this last wave. Like I said, this is a 4th and this is a 5th. Let me bring out the drawing so that you can see how to take that. Of course, I've told you that the 3 became extended here and this is the 4th. Now I'm looking at this as the 5th wave, and that this at least must take an extension of 161.8 for it to qualify as a 3. So we had a 1, A, B, C of a 2, and this is a 3 here. If I go inside of a 5 minutes time frame, I'm just teaching us in case you want to. So that's a 1, A, B, C of a 2, and this is an extension. It's more than 161.8, and this is a 3 here. So we add a 4 of this wave. This is the 4th wave here, and this is, a 5 before this move. At this point, I knew that the structure had been broken, even at this point. But why do I have to wait to use this? I have to wait to use this because I know at least the 4th wave can be 23. It can even be 141. Yeah, 1.41. It can be, which is 14. It can be 23. It can be 36. Ultimately, the biggest correction of 4th wave is 36. And so I had to put it at 36 that if that is taken, I know that they had changed this. So, and if this is my 2, the low of my 2, from the low of my 2 of this wave, we have to come to the peak of this wave here. So you can see my 38. So once this one was broken, I knew that this thing is broken. And that got broken like 3-4 hours before the news. And I knew that what the news was going to do will drop the dollar. So I knew that. So if you are taking a small risk around this area and you put your stop loss here, you won't be. So it's, again, a whole lot of things played for me to really come to terms with, okay, now this should be the last structure. And I know that, correct, this fourth wave had been broken here. So, and see, this is what the price had printed now. A whole lot of things, played out. What are the things that played out? We started from the bigger time frame to look at the structure on the bigger time frame. That's number one. Number two, I saw that, because you won't see this early, and that's why people that are, trying to look at support and resistance trend line, they will miss the early part of the move. So when you see this as a wave that's completed, like I showed one of the video I did, segment by segment, this one was completed, was broken out from. You have to allow this thing to load, The network sometimes are good. Just bear with me. Bear with me. The network actually dropped. This is all. Sorry for that break in transmission. The network messed up. Sorry for that large chunk of a cut. So this part was broken away from the W2X also got broken around this area. Now you take this piecemeal. When you draw your trend of the third wave, you take it to this point, you see a break. Just for the purpose of this teaching, around this area, probably you will see the break here, and if you are following trend line, you will miss this early. The break is around this area, so maybe you will not miss much. But what again you do is that, knowing well that this is internal structure of this wave, and this is like a 1 and a 2 of this wave, you can take this wave, the last part of the wave, and try to also get something out. That's number one thing you can do. One, then again, you know that you have done a 1 and a 2. Now you look at the third wave here, at least to know when the third wave is about being completed, and this is what you can do on that third wave. You can come in here on the third wave and you do this. So this is out. So I know for here, with this break, or this should be finishing the third wave, and that this is the fifth wave. So these are things we do. We look at the segment by segment of what exactly is happening, and eventually we had a fourth and a fifth here of this particular last wave of the wave, and before this drop. Now, I thought about that. Now, what next? When you miss a move like this, it's a big drop. And as broken this trend line tells you, the whole of this move is over. The whole of this move to the upside is completely over. Don't begin to think that, oh, they will now push the price back up and break the top. This thing cannot break the top again now. They are coming to the downside. But do you begin to sell from here? No. And all you can do is the power of what you now know as your trend resistance in this case. You drop this to close from the correction, and as it's done, once it's done, it's going to cross this area, cross this trend line, and begin to correct. So you wait for correction, you don't begin to sell from here. That's what you see. That's a big push. And that's a like $100 move on euro dollar. So DXY has done the same thing. So see what DXY did. You can see the stupidity of the move on the DXY here. And that's why anybody, DXY is not really trusted. See, overnight, this is what they did. Use a very big spike to the upside to take everybody out. Even if you are hiding here, they will take you out. Go back again to this and drop it the same fashion that it went up. This is pure manipulation and intention of taking people out. So if you are soon to push your stop loss, this will take you out. It's not needed, because if you look at US dollar index, you won't see that. You won't see that, and that's why we don't quickly move. You can see you didn't see anything like that, but on DXY, it's manipulation. You can see it, manipulation back to the base. And if anybody sees that on live, you freak out. When did it happen? You can see back to the base, as if nothing ever happened here. They went up, they dropped it the same minute. It happened around yesterday around 10 o'clock. After the big move, they pushed the price back to the base here, back to the origin, and they drop it. Let's look at minute by minute of what they did on 1 minute. This is crazy. This is crazy. It's not needed. It's not needed. It started from here. After the price, in fact, oh my God. So there was a break here, and the price actually, it was just 1 minute candle, really. It went up and they dropped it again. So this is just pure manipulation to take people out. The only saving grace is when you are still behind the top here. That's DXY for you. Now, having said that, we need this to correct. This is not part of correction. This is just a spike. This is not correction. This is a spike. So we're going to wait for that price. In fact, after the price is correcting here, the price has broken the structure. So if you're looking at structure break on this time frame, this is the first structure broken here within this small or micro. This is the first structure break, and there's the second structure break. Now we have a confirmation of a structure break, because this is a whole wave has been broken here. So there's another structure break, 1, 2, and a 3. So what are you waiting for? So we need it to correct. So if we now go to euro dollar, I've taken your time, but I'm just telling you, it's not time to look for trade now, except you have been there. So it's not, so they didn't do the manipulation here on euro dollar. So the euro dollar exactly made a turn, at 71 or 78% retracement. That was what euro dollar did, and they did a truncated 5 that didn't even break the base, and we had this move. This move is big. Like I said, about $100 move to the upside. I'm taking time already, so that's it's about 104. $104 move to the upside. So the same way you connect this to get your trend line, and we are waiting for a break. So once we had a break, that means we are correcting. So you have to wait for the ABC correction. So you don't know if it's going to be deep, but you just have to trust the ABC correction that you get here to know it's looking like inside of here, we've done a 1 and a 2, probably a 3, a 4, and a 5 of this spike or this L of a move. If we've done that, probably we should be seeing a deep correction that would move between 50 or 61.8. But let's see the way I'm gonna let it correct. That's what I'm trying to say. Let it correct. Let it correct. So we've gone past these as a structure. This structure is taken out. So you're not waiting for anything again. So the structure of the fourth wave is taking out 3, 4, and a 5, and we're done here. So we are going up. And here is 85 move of this from the old X here, which is the X to Y. Once we take this out, we are almost at the end of this. We needed to give us a deep A B, and probably a C, then we go up. Of course, when you're having such correction, you should be expecting a turn at every fib retracement, 38, B38, B50, B61, B78, but it shouldn't be more than 78 if we are going up now. So that is euro dollar. So if we now go to gold, so that's where I'm going to stop this. I think I've taken more than enough time now. So let's look at the structure again. Let's go to the 4-hour time frame and look at the structure. So look at the structure again. We had thought that this one had done a 1 and a 2 and a 3 and a 4. Now, this looks like actually a 4. So without breaking, it didn't break this base. It didn't test more than 2147. We had thought that the price is going to give us a more complex structure if it breaks below here and tests deeper around this area, 2126. But the price broke out of this triangle and did this. But when you see this, you must be wary. I think if you want to look for an exit here, because it could actually be a part of a bigger correction of the old, this is the fourth wave now. So this is a bigger fourth wave. So this is a bigger fourth wave to this point. That is a bigger fourth wave. So a 161.8 to the upside will be testing around 25, 26,000. So, and this is just at 22. So we don't know. But what again will guide us is if you have your trend support in place here, you have to mind then the inner structure of this wave for wave, because at the end of the day, price may take this as a fourth wave of this big move, a 1, 2, 3, 4, and at 161.8, you must be looking for reaction of 161.8 extension of this particular wave. If you're able to break it above, then you know that you are still going up. So that is what I want to say. Looking at this move, price had broken the top of this. So price breaking this top, you can see the top of what we regard as the fifth wave here of this move, the fifth, and this is the fourth. The fourth wave, this has become the fourth wave now, which is on probably WXY around this area, and a 1 and a 2, and this had gone up, breaking this area, touching this point. So where is touching now? Are we at 161.8 of that move from the top here to this golden yellow? The 161.8 is around this area. We are almost there. So we're almost there. We need to see if you're going to have a break out of that area. But this is a move, hell of a move, because with this, you may be thinking of relinquishing your position. Gold may begin to fall to now have a deeper correction. So we need to see what gold is trying to do here. We need to see what gold is trying to do here. So because this is gone, and the fifth wave here, because this is like, it could be a fifth wave and it could be, sorry, this could be a fourth wave and a five, but it could be part of a much longer third wave correction to the upside that will probably get to, let's say, around 25,000, 26,000. So it depends on whatever happens around this area, how you're able to count this wave here. So I want to see how price is going to drag across here, but I think we need to wait until weekend to decide what gold will do. Either it's going to break above here, and we are already seeing an ABC correction format here, which is an ABC, and it could have ended his move on the 5 minutes time frame at this point as an ABC, or that this may be an ABC of A, and this is a B, and that this may be going much more deeper. And if that happens, then it tells us that, you know, let me. So if we take this move here as a 1 and a 2 here, and this is a 3 wave, let's see what price has done to the top there. From here, looking at this one, it has gone beyond the fourth. So this is not a fourth wave correction that we are seeing. It's a much deeper. So at the end of the day, I think it has finished a 1, 2, 3, 4, 5 here, and probably we might have a 1, a 2, and we are going to break up. So that is what I can see cooking here. It's so sharp that we've done a fourth, and we are having a very deep pullback here. So this may be an A, B, C. So if we come to the downside, you can look for opportunity to buy again. That's what I can see for now. All right, bye. See you later.